Welcome to the first Global Gold podcast. My name is Claudio Gross, and joining us today is Felix Zulauf, founder and president of Zulauf Asset Management. He is here to share his outlook on the state of our economy, recent developments in the financial markets, and his views on political changes with us. For those that might not be familiar with your work and experience, let us briefly fill them in. You started your career as a trader in Switzerland, and you have since then worked in the financial industry and asset management for almost 40 years now. You founded your own firm, Zulauf Asset Management, back in 1990, and you have also used your experience and expertise as an advisor, strategist, and contributor. And in addition, Felix is also a member of the famous Barron's Roundtable. So, welcome, Felix, and thanks so much for taking the time to join us today. So let's start with the first question.
Thank you, Claudio, for having me.
Thank you as well, Felix. Um, you have based your investment philosophy on the idea that the economy moves in cycles. And for almost 40 years, your theory has been successful in predicting and anticipating significant turns in the markets. What is your assessment in this moment in time for the world economy? In what stage of the cycle are we in now, and what comes next?
Oh, that's a very complex question. There are all sorts of cycles, and cycles are a very unprecise science, so to speak. There are the very long-term two-generation cycles of Kondratiev. There are the 18 to 20-year real estate cycles. There are the capital goods cycles, according to Juglar, the French professor and scientist. And there are the inventory cycle of Kuznets. My assessment of the big picture is that the industrialized world and a large part of the developing world or emerging world are in a difficult period, in a down cycle where structural issues force growth patterns further south, and we are having difficulties to continue the prosperity growth that we have enjoyed for so many decades, particularly in the 80s and 90s and early part of 2000. That has all changed, and the authorities are having difficulties to get us up on a growth track, not the least because they are constantly intervening and manipulating and making things worse instead of better. So I think the next few years will be very difficult. My hunch is that this and next year we will muddle through in most economies. Risks are rising from China, however, that it could trigger something on the downside for the world economy. I think it will get really ugly from later 2017 onwards. So I think the next 5 years will bring us a major economic crisis and turmoil and probably deflating asset prices throughout the world.
So, you were mentioning China also. What role could their, monetary policy decision play in the coming months? Is a devaluation of the yuan a plausible scenario, and how would it affect the U.S. and European markets?
China has been a big plus for the economy. As you remember, China was not part of the world economy until the late 70s, when they started to experiment with free economic trade zones. And and from then on, China experienced a dramatic rise of its economy and rising prosperity and rising widespreading wealth, etc., and has been integrated into the world economy. And in 2008, when the world was faced with the biggest crisis there was in a very long time, the Chinese really bailed the world economy out by launching a dramatic fiscal stimulus program, actually the biggest mankind has ever seen. And it really helped the world economy to get back on track, although growth rates remained for the world as a total very low. China has, however, overdone it, and the fiscal stimulus and the monetary stimulus that were gigantic have led to the biggest investment and credit boom ever seen on this planet. And with every boom, it creates an excess. And the excess is that you have overcapacity of dramatic proportions. The excess steel capacity in China is as big as total production of Japan, the European Union, and the US combined, just to give you an example.
Yeah.
And there are many empty real estate buildings, etc. And at some point, this has to be corrected. And last year, the Chinese decided that they want to let their currency flow freely. And they started, and they were shocked when it devalued in the first few days, 3% or something like that, and they started to intervene. And I think we are at the point where fiscal and monetary stimulus does not have the same impact anymore because the excesses are already very large, and therefore at some point of time they have to support the restructuring and an elimination of overcapacity. And actually, President Xi recently stated in a speech to the party, the Communist Party of China, that they want to address the excess capacity and the restructuring, etc. If they do so, and that's a big question mark, but if they do so, it will slow down the economy. It will require dramatic liquidity for the banking system to support the write-offs that are necessary, and that liquidity creation could actually lead to a lower renminbi or yuan in the currency markets. That would be looked at as a devaluation of the Chinese currency. And a devaluation of the Chinese currency could have all sorts of implications. Most importantly, China is the largest exporting nation of the world. And if they let their currency drop by, let's say, 20% or so, it would have important implications for pricing power of globally manufactured and traded goods. And it would probably put downward pressure on earnings of its competitors throughout the world, on margins, and it would probably put downward pressure on those economies. So it is an important situation and development in China, and we have to monitor it carefully because it is, in my view, the most important variable at all for the whole picture.
Okay. So I mean, you see a lot of risk and volatility and misallocation of capital, and so that brings me to the next question. I mean, after a long period of bad press and bearishness on gold, we are once again seeing signs of investors' renewed interest in precious metals. Can that easily be explained by the fact that in uncertain times people historically seek to protect and preserve their wealth through safe vehicles like gold, or are there more reasons behind this time?
Well, historically, gold was favored, as you mentioned, in uncertain periods as a protection against government nonsense, as a protection against currency devaluation, as a protection against banking failure, as a protection against war or whatever, and as a protection against inflation. I think what we have seen in recent years, since the last or great financial crisis of 2008, is monetary excesses by central banks around the world that have been unseen before. And nobody really knows where that leads to. The excesses are dramatic, and the manipulation is really the biggest manipulation of financial markets the world has ever seen, and done and executed by the authorities, the central banks. And now they are talking about making cash illegal. They want to have electronic money only, to really have transparency and track every citizen what he or she does with his or her money. And they are now abandoning the Euro 500 bill as of 2018. and several advisors or experts are calling for the abandoning of cash money at all and making it illegal. And this creates a lot of uncertainty. All this together, the monetary excess is first, and then the attempt by the establishment to really call for reducing cash money and making cash illegal or abandoning the large bank bills is creating uncertainty, and therefore capital is gun shy. Capital wants safety, and capital is therefore taking part of its capital, or investors are taking part of its capital outside of the credit system and the banking system. And gold is one form in which money and savings can be stored outside of the credit and banking system. And I think that has something to do, the recent developments in the gold market has something to do with those developments we have seen in recent years and months.
Yeah, I think we see exactly the same picture. Given the recent steps taken by the ECB to stabilize the European recovery, the intensity of their interventionism and the poor outcomes of their strategy, what are the policy trends that you foresee for the short and long term? Could we expect to see the US follow suit, and would the election outcome make a difference in your view?
Well, the world economy faces several problems, and some cannot be addressed by the governments, like the demographic situation, the aging, and the slowing population growth and things like that. That cannot be addressed or changed by the authorities. Then we have the accumulation of huge amounts of debt that is a restrictive or restraining force in the world economy, because more and more economic subjects, private households, are hitting their debt ceiling capacity, and that means they cannot go further into debt, and therefore they can only spend what they earn as income, and income is not growing dramatically. Actually, I think disposable personal income for the mean private household in the Western world, after taxes, inflation, necessities like healthcare, etc., has been really going down for 15 years. And as long as that is the case, we have a situation as it is today. What could authorities do? The best thing would be to restructure all the debt that is bad debt, and we carry on the books in our system. Yeah. That would be very important. Another step that would be very important is to really reduce the red tape, the regulation that are sometimes not making any sense and are excessive, and reducing the size of the government. And if, it's sort of a supply side attempt to resolve the problems, and reducing government services to some degree, yeah, entitlements, but also reducing tax rates. I think this would be a good step. Such a process, of course, would be painful in the economy at first, and therefore we needed some fiscal support, and that fiscal support could be in the form of necessary infrastructure, something along those lines. Of all the politicians that are part of the establishment, I don't see anyone coming up with such proposals or ideas. There are a few ideas by outsiders. Donald Trump is talking about this as an example. But others are not talking about this. And as long as they are not willing to talk about this and think about this, we continue to go the way we have been going in recent years. It's more of the same, and therefore we will not solve the problem, and the economy will not do well. Until something bad happens, we have a recession, a crisis, and then we will probably see some fiscal program coming forth, because monetary policy stimulation is at the end of it. We have seen in recent years that monetary stimulation does not lead to the results our authorities thought. Monetary stimulation cannot create growth and prosperity. Monetary stimulation only creates bubbles and overvaluation of assets that are very risky for the system as a whole. And therefore, I think some of the central banks are realizing that their policy has come to the end of the dead-end street. I think the U.S. Fed is at that point, and that's why they want to hike rates and normalize rates, so to speak.
Okay. Yeah, I mean, we're already beginning to see the unintended and unintended consequences of the European turn to negative interest rates. So, as you mentioned also before, investors and companies are choosing alternative vehicles like cash or gold and prefer to stay away from banks altogether to avoid being penalized for their deposits, while even private citizens are actively being discouraged from saving. Would you expect this move to indeed stimulate spending, as was the stated aim of this policy, or is this likely to backfire?
No, this is already backfiring. This is absolute nonsense. Negative interest rates, if not passed on to banks' clients, is a tax on banks. And banks are already in major difficulties because they have too much bad debt on their books and do not earn enough money after the intense regulation introduced after the financial crisis to really write those bad debts off. So you are making the banking system, the center of the credit system, even weaker. And as you weaken the center of the credit system, you cannot expect to create more economic growth, because at the end of the day, you need borrowers and you need lenders. And if the lenders cannot lend and the borrowers cannot borrow, as I explained before, you cannot create the growth that they are targeting. Moreover, I think low, zero, or negative interest rates is a very weakening factor for the world economy, because it means that for actuarial purposes, so to speak, citizens cannot save as much and accumulate as much capital they need for their retirement. And they understand that. And therefore, the lower interest rates go, the more they have to save to keep up with their retirement plans, or savings plans for retirement. And therefore, it is a restraining factor for growth. I think it's counterproductive, but tell that Mario Draghi, he doesn't understand. He's from the old school, and he thinks the further he goes this way, the better it will be. Eventually, he will have to admit that it was the wrong way.
Yeah. Let's switch shortly to geopolitics. Let's talk about Brexit. What is your prediction on whether Britain will remain in Europe or not? And do you believe the UK is better off outside the EU or inside the EU? And what effect do you think a Brexit would have on the markets?
Well, I really do not know what the outcome will be. But when you look at the current political landscape in Europe and also in the US, you see that more and more political parties and politicians are popping up that were not part of the establishment before. Mm-hmm. For instance, in the US, it was a big surprise for most that Donald Trump took the lead in the Republican Party eventually, and will probably become the nominee by the Republican Party. Yeah. It was a surprise by many that Bernie Sanders did as well against the established Hillary as he did. And I think this is a reflection of people being completely dissatisfied by the establishment for all the economic reasons I explained before. The same in Europe. For the last few years, we have seen new parties popping up all of a sudden in Italy, in Spain, in Portugal, in the Netherlands, in France, and so on. And those are all parties, be they left or right, that are against the establishment. So the established parties are losing ground in big time. And that is because people want change. They are dissatisfied with the results of politics over the last 20 years. And they want change. And I think you have to look at the Brexit question in the same way.
Yeah.
The British will vote whether they want to be part of the European Union or not. And as you can see, the European Union was designed to function as a greater Europe entity, but it only functions well when the sun shines. When it starts raining and problems pop up, it stops functioning and all hell breaks loose. And it proves again that the smaller an entity is, the better it works and functions. And the bigger it is, the worse it gets. Yeah. And I think the EU has overstretched it because they want to define every little part of everyone's life, and that is just too much. The big mistake of the European Union, and it's not all bad about the European Union, concentrating forces in certain questions and dealing with other trading blocs is probably not the bad thing. But introducing the mutual currency, the euro, was very bad because the euro for economies of completely different structure creates a lot of stress, and as a result leads to more and more centralization. Yeah. And that's exactly what we should not have, and what we should move away from the centralization and move to more subsidiarity. And I think looking at the Brexit question from that angle, it's probably a good thing if the UK exits for the UK, because as a smaller entity, they can probably behave much better and do what is right for their own country in economic and political terms within the world. And it will probably be a very bad thing for the EU because it will force the EU to rethink whether it is on the right track. And we hear already that according to polls taken in Italy, in France, and in Portugal, I think it was, 50% of the people want to leave the EU. Yeah. Because they are dissatisfied. So the risk for the EU is that a secession development begins. And I think the EU has two choices: either to continue the way they have moved in the last 15 years, and then it will break apart and unravel into a smaller entity, perhaps in a better entity or whatever, or change and adapt to the new situation and introduce changes and move away from centralization. It would probably also mean that the Eurozone have to be made smaller with less participants and members. Those who cannot live with it should exit, etc. So I think this Brexit vote will be very important for Europe. And my hunch is that I see a slight better chance of the UK leaving than remaining in the EU.
Interesting.
And I think the markets will take it. Maybe in the first few hours it will hit the pound sterling and UK asset prices, but I think that will recover very quickly. Whereas I think the markets will look at the Eurozone and Europe, what the next steps of the EU will be and how they will react to it, and whether that will change the thinking in Brussels. I think it will be more damaging for the European Union than for the UK.
Yeah. fully agree. I mean, we are slowly coming to the end of this interview, so let me just switch shortly also to Switzerland. As you know, the Swiss have a referendum of their own coming up in June. So the idea of a universal basic income, a minimum 2,500 franc monthly sum guaranteed by the government for every Swiss citizen, is for the first time being put to the vote by the public. However, the polls indicate that this proposal will be most likely be rejected by the Swiss people, as it was already resoundingly defeated when it went through parliament. However, many other countries are launching experiments and are debating the concept, for example, Canada, Finland, and the Netherlands. In your view, is the rejection of the basic income proposal the right way to go for the Swiss, or are there any merits to this idea?
Well, at first glance, it's a silly idea. But when you think about it, the changes that are beginning in the world economy with the digitalization and all that probably leads to a dramatic shrinkage of the middle class. And it will probably divide the world much more into the haves and have-nots than used to be the case in the last 50 years. And from that angle, I think it's justified to think about a program how to dampen the negative impact of those structural changes that could come through. So I think it is worthwhile to debate. On the other hand, I must say, I do believe in self-responsibility. Yeah. And I think self-responsibility comes first. And all citizens that are freed from self-responsibility eventually become not supporting citizens for a nation and for a mutual entity. And therefore, I think it is necessary to create a system to help the needy in a way that they also, as far as they can, help themselves. And just spreading money throughout the whole population, I think, is a silly idea. So I'm very convinced the Swiss will, with a wide majority, reject it. But I think the debate of the basic problems the world, and particularly the industrialized world, faces with the new technologies coming and what it means for the middle class and the social changes in our societies are a subject that will be addressed over many, many years to come, because it's important.
Yeah. So let me close with the final question. So given the current economic climate, what would be your advice and your outlook for a sustainable, effective investment strategy?
Oh, it's a moving target. The world is a moving target, and world markets are a moving target. So you cannot really give a static advice. But I think the next 5 years will see vast changes in the world economy and vast changes in world financial markets. And I think the biggest asset one can have is an open mind. Okay. And adjust constantly to the developments out there. I think it doesn't hurt if you have a basic skeptic view, and preservation of capital should be the most important thing, because I think it's very, very difficult to earn a decent return and make money over the next 5 years with the traditional assets like equities, bonds, and real estate. That will be very, very difficult in my view. And therefore, I would hold a lot of cash. I would have an open mind. And the way I do it, I have a diversified portfolio of top quality stocks, bonds, real estate, commercial real estate, and gold. And I manage it in the futures markets with overlays in this highly volatile world that we are in. My view is that equity markets will probably come to a temporary buy point, sometimes late summer of this year, and we could have an upside attempt maybe through the first half of next year. But I think from mid-17 on, I think we are in for some bad and nasty surprises for the next few years. So capital preservation is very important. I cannot be more specific than this. Here, talking to many in different different economies, different currencies, different economic situations, different ages, etc., because one advice does not fit all. But in general, if you try to err on the conservative side.
Okay. Mm-hmm. Felix, thank you so much for being with us and for this interesting conversation. I wish you all the very best and hope we can speak soon in the future again.
Thank you very much for having me, Claudio. All the best too.
All the best. Bye-bye.
Bye-bye.